Assets to invest in for wealth building by 2025, according to Robert Kiyosaki. Are you afraid of losing the money you've worked so hard to earn and simply keeping it in the bank? But what if I told you that there are safe investments with higher returns than what you're getting from the bank? In today's video, we'll discuss the author, successful investor, and entrepreneur Robert Kiyosaki, who points to an impending catastrophe and reveals the assets you should buy to secure your financial foundation, starting as early as 2023. The global economy continues to face its worst economic challenges since World War II. The question is how to survive and why Robert Kiyosaki believes you should withdraw all your money from the bank. In a tweet, he criticized the FD, stating that the institution's approach of raising interest rates will cause the stock market, bonds, real estate, and the US dollar to fall. According to the Find Bold website, Kiyosaki recently discussed how interest rate hikes would impact inflation, based on how the United States dealt with the financial crisis following the sudden disappearance of three lenders, Signature Bank, Silicon Bank, and Silvergate Bank, in a matter of days. Kiyosaki also stated that the United States would likely print more money to bail out banks, resulting in more inflation. The goal of central banks, like the FD, is to protect the banks, not you or me. Robert Kiyosaki disagreed with President Joe Biden's assertion that bailing out failing banks would not cost taxpayers any money. Other individuals, like former UN Ambassador Nikki Haley, have also asserted that bank bailouts are socialism for the wealthy. The housing index, responsible for 70% of the increase, was one of the main contributors to inflation. Although inflation has decreased for the seventh consecutive month, the Federal Reserve's goal of 2% inflation is still far from being achieved. This news was eagerly awaited as one of the last economic indicators before the latest Federal Reserve meeting. Banks control the world, and the rich help maintain this control. It doesn't matter if you're a communist or a capitalist, but that's where the fake assets are because they only enrich Wall Street and its partners. Just look at where the money is flowing. Meanwhile, the closures of Silicon Bank and Signet Bank have caused turbulence in the local banking sector, and there have been increasing calls for the regulator not to raise interest rates to avoid further pressure on other banks and to work to stabilize the sector. According to Jimmy Cook, managing partner at Harris Financial Group, the Federal Reserve will have to tolerate some level of inflation for a while to see if its current series of interest rate hikes stabilizes and takes a pause or continues to increase, leading to financial instability caused by policy decisions, which has a range of consequences. First, the increase in the FD, Federal Reserve rate, acts as a lever for savings account rates and certificates of deposit, CDs. While it may be more challenging to obtain loans as affordably as before, rising interest rates still have certain benefits, primarily for savers. In the end, banks increase yields to attract more deposits. Higher rates mean more benefits for savers. Second, mortgage prices rise. Borrowers may rush to finalize a fixed-rate loan transaction for a new home if there are signs of rate increases. However, since interest rates are a significant factor in mortgage rates, they often move in close correlation with the performance of U.S. Treasury bonds. As a result, if interest rates decrease, the cost of mortgages will also decrease, making property purchases more affordable. Third, real estate sales tend to decrease when interest rates and inflation rise. However, if interest rates fall, a home at the same price will have lower monthly payments and less interest paid over the mortgage term. Property itself becomes more affordable when mortgage rates decrease, encouraging buyers. Fourth, stock bonds are directly affected by lower interest rates, as bond yields from U.S. Treasury bonds to corporate bonds tend to drop, making them less appealing to new investors. Bond prices move inversely to interest rates. As interest rates fall, the cost of bonds rises, negatively impacting investors. Additionally, with lower rates, people are less likely to refinance their existing debts as it becomes more expensive. Fifth, credit card usage becomes more expensive. Credit card debt becomes more costly when the FD raises interest rates, as credit card company interest rates typically closely follow the federal funds rate. Furthermore, there is government money, which is fiat currency like the dollar, yen, peso, euro, and yuan. It's fake money, and everyone works hard for it. It's like consuming fake food or drinking fake water, and that's why people are suffering financially, because they are working for money with no real value. So, what can you do to escape this situation and move toward your financial freedom? First, consider investing in short-term bonds. Take advantage of bonds now, especially if you're 5 or 10 years away from reaching a significant goal, such as retirement or sending your children to college. This will reduce the overall risk in your portfolio and provide a more stable income. Second, consider refinancing your residence and investing in real estate. It's wise to lock in the current mortgage interest rate before it goes up. Maintaining a liquid fixed income portfolio is also prudent at this time. When you're young and earning an average salary, buying real estate may seem almost impossible. This is where OPM, as Robert Kiyosaki puts it, comes in: other people's money. Simply put, he encourages people to borrow money to purchase properties and rent them out. These properties create a second source of income alongside your 9-to-5 job. Rental income covers mortgage payments and expenses while putting some money in your pocket. Additionally, real estate investments reduce your taxes, which is like having free money. So why not take advantage of the tax benefits that come with it? Gradually, as you acquire more rental properties, you become less dependent on your next paycheck. That's when you truly achieve financial freedom. You no longer need to work for money, your assets work for you. And if you're smart, you'll start adding multiple sources of passive income as you progress. Third, pay off your debts early. As variable interest rates on your outstanding debts increase due to rising interest rates, paying off this type of debt makes financial sense. Paying off debts early is like getting a return on investment. Suppose you have a loan with a 4% interest rate, like a car loan, mortgage, or student loan. If you pay it off a year early, you effectively earned a 4% return because it's one more year you don't have to pay the bank. Fourth, consider investing in inflation-protected assets like gold and silver. These types of assets are also known as commodities. Do you know why the dollar gains or loses value? Because paper money is a human concept. It's not real. It only has value because governments back it, and governments can back it because the Fed can print more at any time. This means the dollar has no intrinsic value. Therefore, saving in just one currency is never the best asset to build your wealth. No one knows when that piece of paper will become worthless. To overcome all these shortcomings of paper money, all ultra-rich individuals invest in what Kiyosaki calls God's money. Commodities like gold, silver, oil, or even grains and meat remain valuable to humanity in the foreseeable future. That's why Robert Kiyosaki suggests not to keep money in the bank right now, but to invest in these precious metals, especially gold and silver, which historically not only appreciate, but also maintain their value over time and are seen as a way to preserve wealth in the face of inflation. The wealthy tend to increase their wealth by putting their money to work, investing in assets that appreciate over time and provide additional income. They understand the value of time and seek opportunities to make it grow, and that's the game you should aim for, because only with these assets will you have passive income as well as time to enjoy your life with better quality. I recommend you click on the video playing on your screen right now, where the great Warren Buffett will show you some of his teachings to help you multiply $1,000 this year. Thank you to those who watched until here. If you liked it, subscribe to not miss new videos from the channel. I'll see you in the next video.